Hunter Keay with us, Stifel Nicolaus, drag him in here. He came in on the Stifel Nicolaus golf stream today. Okay, worst legroom in the world, Paris to Zurich.
Right.
First class, business class, I can't sit down. Now I can't sit down on most coach trips in the U.S. Does this end? Do they just cram us in like sardines forever?
Well, it's not going to get worse, Tom. I can tell you that much for sure. Planes are packed. What we call load factor is very, very high, obviously. Boarding the plane is very unpleasant with the advent of bag fees, obviously. But you shouldn't expect legroom to go the other way. It's probably going to be pretty static.
Go to load fee. Rip this up, Rex. Let's go to chart 5 right now. I knew what Hunter would say. See if we can get this up here. There, the Google. Okay, there we go. The planes are packed. Okay, there's the U.S. load factor. Well, that's not the chart, Rex. That's the planes are packed, but that's a different chart. Let's come back to that right now. Load factor went from like 70% up to 81%, I believe was the statistic. I mean, I remember when 75% was a big deal.
Yeah, load factors. I mean, load factors have been a steady stream, a steady straight line up since 1960, really since the 50s. What's changing is that when load factors are actually high, pricing then comes in. Airlines try to maximize some metric called PRASM, or passenger revenue per available seat mile. You can do that by having high load factors or raising fares. When load factors are high, that's conducive to pricing increases, and that's what we think is going to happen this year.
We've also got conducive oil prices. Bring up the note of the day from Hunter Keay. This is a jarring note. Oil prices are good for airlines. We believe the longer-term benefits are underappreciated. Though no near-term estimates, they may come down. We feel comfortable modeling growth in 12 with oil prices higher. Explain.
The airline industry is one that cannot be trusted with regard to capacity growth. High oil prices are the only factor that are a worldwide governor to growth. It prevents airlines from buying new planes in India just as much as it does in Germany, just as it does in the United States. When you have these high load factors, airlines typically are tempted to throw new seats at packed planes.
I'm shocked.
Big surprise, right? So when the planes are full, airlines say we can either raise fares or add more seats. They tend to add more seats, and that's destructive to pricing. When oil prices are expensive, it's a huge deterrent for them to buy new planes and add new seats, which of course destroys pricing, resulting in very, very, very deep troughs, unfortunately, in a cyclical industry.
Okay, let's bring up too much information here, Rex. And this idea here of, can anyone make money? Here's the chart. It's ugly. Too much information. I mean, this is long-term, 15 years, a given airline. It happens to be a big airline with the advantage of a government behind it. Air France, KLM, that's miserable performance.
It's not good.
International, domestic, it doesn't matter, does it?
Well, there are changes that are occurring.
How do you stay in business?
It's a cyclical business, right? And you can do very, very well in these stocks. Let's not forget, in American Airlines, when it avoided bankruptcy in 2003, it went from $1 to $40 over a 3-year span. That was an investable idea. The key is, very, very good. And same with Continental, went from 2 to 38. Very, very investable ideas. The hope going forward is that high oil prices sort of raise the troughs a little bit and make the cycles longer by airlines being more disciplined on capacity control, focusing on pricing. There's a lot more fee initiatives that are still, in my opinion, have yet to come into the system, which are very, very profitable, like international first bag fee of $25. That could offset, by our calculation, a 20 to 30 increase in the cost of crude.
This is really important. Fees. I feel like it's a bank. The airlines are the new banks. Is that the banner we need to write?
Well, I mean, let's put it this way. Fees are here to stay, and the unbundling or a la carte initiatives are probably only in about the third inning. As much as it feels like everything's unbundled and you're paying for everything as a consumer, one international first bag fee of $25, like I was saying before, offsets a $20 to $30 increase in the cost of crude oil. And the only way airlines are going to pursue that kind of unpopular initiative is if crude is expensive.
Look down here. Look at the screen down here. Airlines are the new banks. That is a break exclusive. I mean, I said that, folks, not Mr. Keay. We're not. But fees are a big deal.
Fees are a big deal, and there's a lot more to come. United told us recently that only 40% of the bags they transport have a fee attached to it. It seems like it would be a lot more than that, obviously. Consumers are very used to us. They feel ubiquitous, but they're not. So again, this goes back to high oil being good for airlines. You start charging international $25, even just transatlantic, I'm raising my estimates with $110 crude from current levels.
Is premium, is business class getting bigger again with the better GDP?
Not necessarily. What you're seeing now, I think we're going to see as United Continental sort of makes their fleet harmonization determinations, we're going to see more of this economy plus product. It's kind of a sweet spot for the airlines where they can upsell it at the airport much more easily than they can a business class ticket, which is usually 3 to 4 times more expensive. That's very profitable. Again, unbundling, ancillary revenue initiatives.
This is an elegant chart, folks. This goes back. We think of Southwest Air. American Airlines needs some love, and this is a normalized chart back a decade. And the white line is Southwest, which is a success. I was surprised, Hunter, how it's really gone nowhere over 10 years. But American Airlines, to be polite, has been troubled. Is Southwest still the benchmark for the United States?
Well, I mean, Southwest is the largest carrier in the domestic United States.
I did not know that. Really?
Yeah, it's shocking. Within the domestic United States, they have about 20% of the capacity in terms of passengers transported as well. There are a lot of turnaround times in the aircraft. Southwest is probably the closest thing we have in the airline industry to a real business. You know, they deliver steady ROIC. They make money consistently. They own a bunch of their planes. Their debt burden is very, very limited. But the growth catalysts that they have are, let's just say, not very sexy compared to some of the other international airlines.
Two questions. You said 2 to 38 on Continental. What's the new Hunter Keay Continental equivalent?
Well, because of the dilution, obviously. I think, you know, United Continental, that merged carrier, 8 times our 2011 estimate, which is actually represents the low end of the historical range where airlines are traded, represents $39 per share, end of this year. We don't see any reason why that can't happen. It's going to take some fee initiatives. It's going to take some fare increases to offset this run in oil prices. But again, the only way those happen is if crude's expensive. I'd like to see crude run to $100 tomorrow. Just get it out of the way. Who
loads people on the planes the most efficiently? Yeah. What a song and dance.
Sure. Yeah. Well, actually, it's funny. It's kind of come full circle with Southwest. Southwest boarding process used to be very sort of cattle call, you know, classic. Everyone's making a break for the gate. Yeah. With the alphanumeric boarding system and the lack of bag fees, it's a much more civil boarding process on Southwest now than it is on the network carriers, where people are scrambling for bin space. And it's a very, very difficult boarding.
You got to come back. I mean, we all fly, and it's all painful and all that. And I had a very pleasant trip, thanks to JetBlue and United, here out to AEA in Denver. But